Oh man, so Bitcoin recovers to 27.5k, but this is bad. Look at the charts right here, guys. We are forming something which is getting me a little bit worried. We're seeing excitement in the market about potentially resolving this debt ceiling, which is rotating risk a little bit on. But why is it that I'm not fully buying into this? We're going to break that down and a lot more. Smash some likes. Don't forget to subscribe. Guys, first and foremost, let's take a look at this, right? So people are feeling excited because House Speaker Kevin McCarthy told CNBC on Wednesday that he does not believe the US will default on its debt. Joe Biden has also stated that he's going to cut his trip short to Asia and will return on Sunday. So some traders are now getting excited at the potential that this debt ceiling negotiation could come to a conclusion this week. Now, personally, I'm not buying this right now. I think there's still a lot more to go in terms of this political back and forth, and I think that's going to create more volatility here in the short term. But that doesn't mean we ignore the upside. We need to look at these patterns very carefully. And what do you notice? When we bounced here from the line which we had drawn a very long time ago, 26,200, we did bounce nicely. But what did I say? You need to get past this high. Right? It's pointless if you can't create a higher high. What's the point? So we didn't. We failed that. Then we go, okay, on the leg down, at least create a lower low. Don't come back to the orange line again, right? Good, we got that. We got a higher low, okay? Now we want to post a higher high, right? We need to get past this high at least. No, we didn't, right? We're curling over here over the last couple of hours. And this weakness here in the price is worrying short term. This is on the hourly chart for those trading. Now, longer term, what are we looking at? Well, if we zoom out to the 4-hourly chart, we do still have hope, but there's a lot of overhead resistance. These levels here are not going to be easy to break. 27,300 range, all the way up to my dotted line at 27,700 range is not going to be easy to break. There's a few other ways of looking at this, right? So we know we fell from our symmetrical triangle pattern. On the top side, these areas will continue to act as resistance. So unless we can clear past these resistance and go past the apex of the triangle and beyond, we've not nullified the downward side. So still, this can still curl over and continue down to the price target. So I don't want people to get prematurely excited and get caught out. Similarly, if we take a look at the head and shoulders pattern, it continues to play out, right? We're not even touched this on the backside, let alone going beyond it. So this could easily just be a move up here, rejected to the downside. Now, of course, if the debt ceiling issue is resolved, if there's the fundamental catalyst, then we've got to take our technicals, we've got to weigh on our fundamentals and take the blend of that. That's what this channel is about. Not just doing blind technicals. No, technicals plus fundamentals plus macroeconomics. 3 things. Don't let any YouTuber or anybody else tell you that, you can't focus on those 3 things. You have to focus on all 3. You can't just be a technical trader. You can't just be a macro trader. Imagine you're trading a head and shoulders pattern here and you're waiting for the bounce to send this to the downside from a technical perspective, and boom, the debt ceiling negotiation gets agreed. Off we go to the upside. So come on, guys, you got to check in on the news as well, which is why I try to bring you everything here on this channel. If you zoom out to the daily chart, just to get a little bit of perspective of where we're at, this is where we're at. We're in a nice big upward channel here on Bitcoin. Ever since we started rising from the bottom here around 15,500, we worked our way in this channel. Now, this head and shoulders pattern could, of course, give us a major reversal down to 25 and these kind of levels down here where my cursor is. If we can hold and get above the center line, see the dotted line there? If we can get above that center line, not only would we invalidate the head and shoulders line, but now we've got more of a chance of working our way to the top side. And that's what's going to be important here. It's all well and good us here invalidating the head and shoulders pattern, but there's plenty of resistance ahead. This is just small resistance. Once we clear this, we then have to get above 30, we then have to get past 31 to create a higher high, and then we can carry on with our upward trend, right? Perfect, that's what we need. So we can't just expect, okay, we just need to get to the upside. No, we need to get above 30 and 31. So there's a lot of work here for Bitcoin to do. On top of that, we continue to have regulators across the world giving crypto grief. Right? UK, where I'm sat right now, is the latest, where the lawmakers are bidding to make crypto as gambling. I mean, like, what are you on about? Right? How is it the same? Why are you putting it in the same field? Now, whilst this may have some tax implications which may be positive, it's not a good look. Why are you bucketing an investment asset class as gambling? just because the majority of people may try to gamble with it, you can't judge the asset based on how people use it. Just a quick one for those of you frustrated by Bybit's new KYC requirements. There is a new decentralized exchange offering they have called Apex Pro. You'll find this within your Bybit login. If you haven't set one up, use the link in the description. That is an affiliate link which does support the channel. But once you jump in, set yourself up a Web3 wallet and you can use their fully decentralized platform Apex Pro, which gives you all the same features and usability that Bybit has, but it's decentralized. You hold your own coins, you don't have to do KYC, and it is a DEX. Definitely check that out. That's like me saying in the early days of trading stocks, there was an abundance of pump and dump schemes, which continue to this day, on penny stocks, on new companies. All that happens now is they hide those. They're not listed. They're done over the counter, right? And instead, you have this NASDAQ where everything is regulated. Crypto will get there too. Crypto will get there too, where the big market cap projects are in some sort of NASDAQ or FTSE 100 here in the UK on a big exchange, and they're all pre-vetted and there's no pumps and dumps, great stuff. But don't act like, the stock market in traditional finance doesn't go through that all the time. There's pumps and dumps and penny stocks getting wrecked all the time. So, to tarnish the whole crypto space with, oh, look, it's just people pumping and dumping, it's just meme coins. I agree, that's a bad thing. I think the influencers who are jumping on this meme race are scandalous, and you should stop watching them, of course, and don't listen to anything they're saying. Do not chase these pumps and dumps. And they're giving a bad name for crypto. But this is not helping our case. Right? On top of that, you've now got Pepe-themed Bitcoin frogs now amongst the most traded NFT amid Bitcoin ordinals hype. So you can now apparently buy these Bitcoin frogs. Again, I've got an ordinals BRC20 video posting later today because, again, a lot of the BRC20 tokens, still very early days, they're very meme-based, right? But we need to look for the gems of utility in there. Okay, trading social coins, okay, fine. If you want to trade them and have fun with it, that's okay. But what I'm saying is you need to focus on utility. What are going to be those early projects on the BRC20 network that you can invest in? That's what I'm trying to research and bring to you guys. And there will be a video on that later today with one of the projects I did spot during my research. Okay, so now we jump back in. We can see Fear and Greed Index sitting at 51 in that neutral space. People are pretty comfortable, right? With Bitcoin sitting here at 27,000, people are starting to feel confident that we can start moving to the upside. Another way to look at this is you're starting to see support above our ascending broadening wedge, okay? But look how precarious this is. Look how, so if you ignored my blue lines there, right? If you took that out of the picture, what people may be telling you is that we can build some support here and we can work our way up. But the reality is we can't until we get past this peak. Until we get above 30, you can't say that. Until we get past here, it doesn't look safe because we could just be doing this and then come back down, do this. You see what I mean? And come back down. We're in a downward trend within that pattern. So very important that you follow the data that's being shared in front of you right now instead of following the hype. The debt ceiling negotiations will continue to create volatility. Make sure you're listening in on the latest updates on that to find out, because if we do get good news and we can get through this impasse, which is a political impasse, then we can start working our way back up. But when we work our way back up, it's critical we get past 30 and 31, then things start to get exciting. Again, let's get a check-in on our EMA ribbons, and on our daily chart, we are coming into resistance, okay? Very important. Why is it we're getting a red candlestick right now? It's no surprise when you're running into your EMA ribbon here that it acts like resistance. It's starting to flip to the downside, which is not good. Look at those yellow lines crossing over the deeper colored red lines. That's a bearish situation, okay? And if they complete their flip and it starts expanding in the bearish sign, just like this was expanding in the bullish phase, if it starts expanding in the bearish phase, that could suggest a bigger, deeper pullback here for Bitcoin. And if we're getting a deeper pullback on the daily chart, that means we're going to get a pullback on the weekly chart. And on the weekly chart, you guys know we've been using this as a rule of thumb. We've got some room, but we've not got much left. A close below now 25,000 is on the bottom of this EMA ribbon. Anything now below 25,000 here, right there where my cursor is, will result in us losing our weekly EMA ribbon. So we've got a little bit of room to play with. Come into here, retest, but sooner rather than later, we want to be bouncing from here. We want to be getting above 30, getting above 31, and seeing the end of this trend and moving to the upside. That is what we need here from Bitcoin on the weekly chart. Of course, dictating this in the background is the dollar index, right? Risk rotating powerfully back off. The debt ceiling negotiations makes people nervous. It makes them want to get out of risky plays and into safety plays. And safety plays are characterized by the dollar index rising to the upside. Look at this dollar index now climbing through 103. Again, this is on the weekly chart. If we jump into the daily chart, you will see that not only has it rallied powerfully, it's now gone well past its daily EMA ribbon. This is causing the pain on Bitcoin and risk on assets. In order for this to change and for Bitcoin to bounce from its EMA ribbon, this needs to get rejected on its daily chart, and we need to close it back below the daily EMA ribbon. And similarly, on the weekly, we need to send it back down. We need to do this to the downside. Okay, very important here on the dollar index. Now that may take some time. Dollar index may continue having positive week or two here as we continue to negotiate the debt ceiling. But we're hoping that once that's resolved, which, you know, history suggests that they always do resolve it, they just leave it to the final hour, we should start to see risk starting to bounce back on. So there you have it, guys. Really crucial time in this market right now. Do not get caught up in people just jumping in and saying, oh, look, it's exciting, it's green, we're going back to 30,000. There's a lot of resistance overhead, and it's a key moment in this debt ceiling political negotiation as well. Thanks for watching, guys. If you appreciate these quick TA updates, smash the likes. Don't forget to subscribe. Don't forget to go watch my BRC video, which is out here. And there's another one coming on later today. And I'll see you in the next one.